Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. And on tonight's program, I'm going to get Junbei Liu to run through 34 stocks that reported last week. We're going to see whether they're in the buy zone or should be rejected. And then after that, I'm going to look at the 9 best stocks that come out of that 34, where the analysts are really giving it a thumbs up, and some of the predicted rises are quite substantial. That's the entire program. Let's now kick off with Junbei Liu of Tribeca Alpha Plus. Thanks for joining us, Junbei Liu.
Thank you for having me, Peter.
Okay, so I'm wearing glasses today because the print on this paper is really small, and I want to go through a lot of the companies that reported last week. And I'm sort of looking at what the analysts are saying, but I also want to get your view. In particular, one company that you have liked in the past, and you alerted us to the fact that it was going to do well, Lovisa. It hasn't got a fantastic assessment from the analysts, but I know you like it, and I know others do as well. But we'll get to that in a moment. Let's kick off the first one. There's a company I don't like very much, is AMP. You see any future for AMP?
Look, I find it very difficult to see future for AMP. Look, I think
Yep.
it is, and it became too cheap. So it had a bit of rally, has a lot of cash, buying back shares, paying a sort of dividend. It's okay, but for me, it's nothing to be excited about.
Yeah, 2 out of 4 analysts like it. Citibank can see a 14% rise, but it's the most optimistic I can see. Now, what about Downer? What do you think of that company?
Look, I think Downer they reported result a little bit better than expected. They're still going through a pretty tough environment. The cost inflation is still pretty high. Next 6 months will probably be the bottom. So market is trying to look through the tough environment. But look, it's not that cheap anymore. So for me, it's no, I don't get too excited for that one. It's probably tracking sideways for the next 6 months.
This is one that really surprised me, Junbei Liu. Dexus. Analysts really like it. Being in the property space, a lot of property companies aren't liked. What do you think about Dexus?
Look, I think it's just tough. It has a bit of a rally because offices just become a bit too cheap. But net there, office is a very tough environment. Outlook is hard to assess because look at all the vacancies and the like. It's almost a asset class that is sort of in structural decline. Much rather in the property sector, sitting in the Goodman or even the shopping centers are looking pretty interesting, like the Center Group and the like.
Okay, and we'll probably get to those two as well. Let's go to IGO. What's your view on that?
Look, I think there's an easier way to play lithium. I'm much rather in the PLS, which is Pilbara, or the mineral resources is an interesting way to play it too.
Okay, now next one I've got is one of your favourites of the past, Lovisa, but it has had a big run up. Have we missed the boat on Lovisa?
Look, I don't think you missed the boat if you take a slightly longer term view. Always is hard when something rallies so significantly into result and rally on the result day. So technically, in the short term, might be a bit of weakness. But look, I will be using it as a buying opportunity. It is a company is rolling out stores aggressively. Things are going well, and the comp stores, which is like for like, is growing positive now. So and they just launched in China. Does have a very strong story behind it. So I'll be using any weakness as a buying opportunity.
All right, APA.
Look, this one just is not very exciting for me to really
Okay, it's
it's
a dividend play, isn't it? Really, APA.
Yeah, that's right. Well, it's more infrastructure like a sort of stock, and there's just really nothing in it for me to get excited about.
Okay, what about GQG? I guess it's a rival in the market, but it's done pretty well. Do you ever buy other fund managers in your fund?
I do, and that's the one I hold. I think
Okay.
I vaguely remember a few weeks ago we spoke about this one.
Yeah, we did.
Yeah, about the stock ahead. Look, I think it's doing really well. It's one of the few managers still have inflow in the listed space, and then the performance is very strong. So stay with the winners.
Yeah, okay. Let's go to QBE. Used to be a winner. What do you think about QBE nowadays?
Look, I think the insurance company is still doing pretty well at the moment. So the rate increase is still in the double digit, although the forward momentum is looking like it's slowing down somewhat. But it is a defensive stock. It's got earnings growth, so got a reasonable yield. So, it's one of those defensive companies kind of just keeping your portfolio.
Okay, let's go to Cleanaway now. Not a real lot of support from the analysts. What's your view on Cleanaway?
Yeah, look at this one is that the result wasn't flash, and with kind of GDP sort of slowing down, it's a GDP plus sort of story for this company, and with the sort of economic growth slowing down, this one's momentum will continue to slow. There's really nothing in the result that makes you feel it's whether too cheap, it's not cheap, it's reasonably valued. So it's more in that neutral territory. I probably wouldn't be rushing out to buy it
Yeah.
yet.
I guess if you're a boring, very safe play, you could think about it, but I'm with you on that one. What about Centre Group? You did mention it already. Um, here we've got, there's nothing really over the top, but the analysts are kind of supportive of Centre Group.
Yeah, I think so. Look, I think the retail segment of the property sector is actually doing quite well. The rental releasing rate, which is when someone vacant the space and then lease it to someone else, is now showing growth in terms of what they can charge. So that's a good indicator of where the rent is going in the next few years. And this company, over the longer term, in the last 5 years, really underperformed many other segments. So we do think this one represent value. And next little while, given retail environment isn't that bad, I
Mm.
do think that they will do better.
Okay, so what about a company that I think historically has often come out of big sell-offs? And I've got to say, the analyst view is not bad for Domino's, but what do you think about Domino's?
Look, I think for a slightly longer term investor, if you can look past the short term weakness, it actually looks very cheap. Cheap
Yeah,
as in
it does.
yeah, things are turning. The Japan, that they've done a few things. They put up their prices way too much last 12 months, right? So is every other fast food companies, because they don't know how to deal with inflation. So they all just went out and put up their prices. Now that it doesn't quite work, so consumers sort of have a revolt and doesn't really want to buy their stuff. So now they lower the price. Australia's working. In Japan, it sort of seems like it's working the first 6 weeks of trading. Europe is turning very slowly, so net seem like things are turning the right way and it's cheap. But next 6 months, they're still waiting to see whether that momentum carries through, because remember, this company still have a lot of debt. So that
Okay.
is that holding me back. But I think it does look good value at this point if the momentum continues.
Yeah. Okay. Well, what about Santos? I was surprised how supportive the analysts are for this company, but what's your view?
Look, I think I'm agree with them. It is very cheap, and if you want to play oil prices, you'll be in Santos, because it is the value play, a value conglomerate in that
Mm,
space. Now the challenge is the oil price is just very weak. I think just because globally economic reality is slowing down. Now, if we do have China picking up quite quickly, then that oil price can turn quite meaningfully. So it is a value name that I do have in my portfolio. I think it's well supported because the asset itself is doing quite well.
okay. Let's go to ARB, often called the blokes company because they sell big bull bars and stuff like that. But it's historically been a pretty good company. At the moment, the analysts no, they probably think it's priced to perfection, maybe a little bit overpriced. What do you think?
Look, I'm kind of more neutral territory now. I think people, it's an incredibly high quality company,
Yeah.
but it's been the COVID beneficiary because all these bars installed on the car, which has been very, very strong. At some point that might slow down, and it's trading at very high multiple as well. So that's the whole. That's why analysts say it's price for perfection. If we go through a period where the car sales and is falling somewhat, this company's earning might be a little bit weaker, but it is a great company. You'll be buying on the pullback. Just at this stage, it does look quite expensive.
Okay. What about Ansell?
Yeah, I see analysts like to play the value, putting on the buy for this company. I think they're just way too much gloves around the world. That we have this glove
Yeah.
of gloves.
Yeah, we're oversupplied in gloves. Yeah.
Absolutely, absolutely. Look, there's still I don't see the end of the tunnel yet. I think it is cheap, but so it should be. The earnings probably still too high.
This one is on the nose. It used to be a very supported company, namely Netwealth. What do you think now?
Oh, I like it. Look, that's
Yeah.
a kind of holding it as my, my market exposure, because remember, it's earnings linked to the share market performance. And, obviously as the share market does better, there's more flow coming back, people investing more in the share market. It's great for this company. And it's continued to, as a digital platform, continue to take share away from the likes of AMP. So, I do like it. I like Hub as well. I think both of them are very high growth company, and they deserve to be at a premium rating.
Okay. This is one that occasionally goes for a nice spin when the government changes policies. Macmillan Shakespeare. What's your current view on that company?
Look, I think that whole sector, in terms of the novated leasing, is going through a bit of a boost at the moment because of the policy change for the EV. So
Yeah.
get cheap EV and through those sort of novated lease. So they're all doing really well at the moment. But Macmillan is a bit harder. It is much cheaper than the like of Smart Group, which is a pure play for that space. Macmillan recently lost a very large government contract to Smart Group. So to me, it's just a little bit harder to play and to gain exposure to the EV space. The Smart Group is much better way to play, and I think there's a little bit more in the tank yet.
Okay, there's a company I've nearly lost patience on, but the analysts seem pretty positive on it, and that's Ramsay. What's your view?
I think Ramsay is going to report very soon, and the result is going to be somewhat disappointing from what we heard so far. Look, I think the company represents significant value, but at this stage, you do need the business. I think the value probably start to appear in the next 6 months, because they are going to talk about how they're going to split out the French business. Remember, the takeover offer previously, the sticking point was the French business. And if the company is going to try and split out the structure and the like, it is going to show the value in its core business, which is the Australian business. I heard the UK business is doing okay as well. So, so my view is that it's very deep value. And certainly after this result, you will see quite a significant, opportunity to be positioned in this.
So your bottom line is wait for the result, probably
With-
get a lower entry price, but over the next year or two, it should be a reasonable return.
Oh, absolutely.
Okay. I love it when you say absolutely. All right. Let's go to Medibank, which is probably a boring stock for you.
Yeah, look, it's I just think the Medibank has done incredibly well in the last many years. They benefited from people not claiming their private health insurance, not going to the hospital. So if the Ramsay is on the way up, Medibank is on the way down, because the claim will come back and the hospital volume will return. Just took a little bit longer than expected. And then also in this environment, private health insurance, you just can't increase your rates that significantly, just given the cost of living pressure and all of that. So, potentially there's more people dropping out of the private health insurance. So it will become a tougher environment for these guys. Pays an okay dividend yield. So it's really just, you're sort of sitting at that mid-single digit dividend yield. And quite frankly, your cash rate probably is a little bit higher than that. So it doesn't quite stack up at this stage.
Okay. What about a company like Stockland?
I do like Stockland in that whole property space. Remember, Stockland offers you that sort of 35% exposure to residential development. More recently, in the last 2 weeks, we've seen takeover offer in CSR, offer in Borough. We have this pending housing boom coming. So, across other property space, Stockland is more exposed to residential. So it gives you that. And I do like that. The only problem is that, obviously the office is not fantastic, but, it's just in that whole property space, it gives you a bit more skew that space to the property. I do like it.
4 out of 5 analysts do like it. I think Morgan Stanley's the most optimistic, up 14%. Now, what about Cochlear? Like, great company, but the analysts really think it stinks at the moment, or the share price is too high. That's what they're really saying. 0 out of 6 analysts like the company. The biggest negative was Ord Minnett, down 36%. But what's your view on Cochlear?
Look, I hold Cochlear. It's one of my top healthcare positions. I think it's a winner. Yeah, I
Yeah,
let run. I think healthcare analysts sometimes they don't understand. So for a high quality company that has global market share, global addressable market, it's what valuation do you put on? If you look at other global growth businesses, they are tech companies, and their
yeah,
value far higher than it is achieved by healthcare, just because it's trading more than the CSL and others. I just think that I don't think they're a sell. They're a hold. Will I rush out and buy it? I probably will
yeah,
wait a bit,
yeah.
but I hold them in my
Yeah, I
portfolio.
wouldn't be selling my Cochlear shares either. Westpac doesn't look real positive. What do you think about Westpac?
I think it's the cheapest of them all, and but it is very low quality. It is a value play for the banks, but quite
Yeah,
frankly, I think all the banks have done really well.
yeah.
It's left a little room to move for that whole sector.
This could be too boring for you, June Bailu. What about Ampol?
Oh, and for to be honest, I like Viva. So I my portfolio holds a bit of everything. So my one
Yeah.
of my exposure is Viva. I think not
That's the
only
petrol stations company, isn't it?
that's right.
Yeah.
It's very like Ampol, but it was the Coles exposure one. So Ampol was the Woolworth linked, whereas the Viva is the other one. So Viva, what's really driving this one is that both of them are exposed to the higher the higher margin that is happening at the moment, the refiner margin,
Mm.
but Viva has its own cost out and its own refurbishment program. They're going out refurbishing all their centers, the petrol stations, and every time when they refurbish, they get a huge sales uplift. So it's a self-help story, more so for Viva. So so I'm sort of sitting in the Viva than the Ample, which is pure
Okay.
play the refiner margin.
Another boring one for you, Bendigo.
Yeah, I think one is that all the banks are sort of perform really well. I wouldn't be there. And Bendigo, as a regional bank, is doing going to do a lot tougher than the majors.
Yep.
There is speculation today about them merging potentially with Judo, but look, if anything, it's probably more defensive move than anything else.
Okay, Treasury Wine Estates.
Yeah, that's a buy.
Yeah, you've always liked it. We don't have to do much more than that. Most of the analysts are with you. Magellan, yeah, only 3 out of 6 analysts like it. But what do you think? Is there value there?
Look, I think it's done. It's done well, and by now I think it's sort of rallied a little bit too hard. If the share market go through any bit of a wobble, this one will be the first one to get sold off.
Okay, Seek.
I like Seek. I actually
Yep.
think Seek is counter-cyclical, and the next 12 months things will get a whole lot better for them, and it can become, it is much cheaper compared to other classifieds at the moment.
Yeah, Challenger.
I think it's done very well. It was a really good result. It's probably more a hold than rushing out and buy at this stage.
CSL.
CSL is a buy.
Yeah.
Share price result was a bit poor, but look, it will be fine.
I think the consensus rises 10%. 6 out of 6 analysts like it. UBS is the most positive on 15%, which may well be a little bit too conservative. If we look at the whole year ahead.
Yeah, that's right. I think CSL will do fine.
Breville.
Breville is a buy, but next 6 months will be a bit of a test for them because things are slowing somewhat. So we do need to see sort of improvement in some of the sale through across Europe because they lost a bit of share. It seems they lost a bit of share, but we need to see that. But it is a buy.
Yeah, a lot of people bought a lot of Breville stuff during lockdown. I guess they're still using it, but yeah, good company. Let's go to Woodside.
Look, I prefer Santos than Woodside
Yep.
at this stage, yeah.
Okay, Altium, it's done fantastically well. Like the analysts are against it because it's done fantastically well, but can it keep on rising, do you think?
LTM, is it?
Yeah.
Yeah, so LTM, the bid is already in the price, and then the spread is the good rate. So I think it's done. So it'll trade almost like cash until the deal get approved. You need the FIRB approval, you need all of that. So that's much it.
So what you're saying is that if you've made good money on Altium, there's no point hanging around. Take the money and invest in some of your great tips.
Yeah,
Or your fund. You like your fund, wouldn't you?
I think the bid price, there's only like a less than 5% sort of exposure now. So, you know, you got to wait many months for that 5%. So if you have a better buying opportunity, buy something else.
Okay, last one for today is Coles. At a
Uh,
time when supermarkets are being picked on by the Prime Minister, what do you think, Coles?
Look, it'll be tough. You know, I would actually prefer to buy Woolworth now. Not buying buying a lot, but it certainly looks interesting now. And you know,
It's
certainly look.
okay.
Yeah, so look, I think Coles is a supermarket is going to be very tough, and I
Yep.
think Coles was losing share to Woolworth. And if I'm to buy, and because of value, I'll buy Woolworth. But obviously, Woolworth are going through all sorts of issues. But to buy the market leader, and it is a quality leader, you know, is probably my preferred play. But feels a little bit too early to be, you know, in the supermarkets.
My last one before I let you go. You've seen a couple of weeks now of reporting. What's the one stock you've added to your portfolio because of what you saw in reporting?
Okay, what stock have I bought? Actually, I was thinking quite a lot of it. So we trying to go, well, we bought Prometheus, so we bought more of it. Because you know, share price down 20% on the result day, and the day after was, you know, ridiculous, and then now sort of recovered. Trying to think a new stock we bought in the portfolio. Satire, I think we talked to it before as well.
Yeah. What's the ticker code for that?
CTT.
CTT.
PT.
Okay, I'll put you on the spot. I shouldn't have done that, but you give us some good answers. Thanks very much. I'll see you in a couple of weeks' time.
Thank you for having me. Good luck.
Thanks. That's Junbei Liu of Tribeca Alpha Plus. And that's the first half of the show, which is available to all people who go to Switzer Daily. If you want to see the in-depth analysis of the 9 best companies that come out of that 34 stock analysis, and these are the views of the analysts, you'll have to be a subscriber to the Switzer Report.